Good day, everybody. Brian here on February 9th, 2026. So, what I'm going to do in this video, I'm going to be talking about some very revolutionary things. I'm going to make some predictions here that might be, I don't know, call it what you want. Two things to be taken away from this particular video you're about to watch. First, you're going to watch a new, well, not new, but fairly newer Chinese LLM that's probably going to destroy a lot of the US AI out there because of its cost and how good the output is. On top of, I'm going to show you also what I think will happen to a lot of the retail trading platforms, including both TradingView and MetaTrader, will probably no longer exist based upon what I'm going to show you. So hang tight, watch to the end to know what I'm talking about, and I think this will set things straight. Okay. So, what we're going to look at first is I've shown this a few times. Normally, I can create news driven dashboards for the day, but I'm getting faster at it. And the number one thing I want to show you is what I've shown before. So, this is for today, February 9th. All of the different news driven events that can happen and project trading events that will affect and impact certain trading opportunity that's presented within this trading uh, dashboard. Okay, so you can see this is generated from Claude 4.6, the latest and greatest. So in this case, we have an energy complex strategy, Brent Crude Oil coal spread, some positioning, how to do that, and the first different legs of it, the different events that will drive it, and what we can expect over these different time periods, expected drawdown, return, Sharpe ratio, win ratio, profit factor. Okay, that's fine. That's what we're used to. Again, this is from the latest. That's just been released last week, 4.6. Meanwhile, we have this one, same prompt, nothing's changed, different output, but this is generated from a Chinese model, LM, called Miniax M2.1. The cost here is going to, it's staggering. So you can see here we have the same level compared to output, very similar output, maybe different. But the idea here is, to, as I said, to take one of these news events as a strategy and be able to code it up very quickly. Okay, that's the goal here. So in this particular strategy, what we've got here is we have this: what could happen is Strait of Hormuz with Iran, the U.S. Armada. What could happen? Let's measure the risk and let's see if there's a trading opportunity here. So it's going to give you a projected implied volatility. Now, this is all futures and options, which I've talked about for months now. And why I'm using this, because what you're about to see here is how you're able to reduce your risk, still be in a tradable environment, protect your downside, and have virtually unlimited risk, okay? Or unlimited profit potential, okay? So if you've not taken advantage of my course that I've got, you'll see why I've raised it 2.5 times. Um, So this is what we're involving here for downside and upside protection on this particular trade. We set up a Brent call option, 20 contracts, could be any amount really. Um, Targeting of at the money plus 5% on a buy or a long. Okay, and then we have a Brent put CL and same target but minus 5% at the money. Okay, so then we also, and these are options here, then we also double down 40 contracts to sell a short on the Brent future, make it market neutral, and hopefully our profit here is basically all the detail here. But for each 1% move in Brent, we execute 2 additional future contracts in the direction of the move to capture Gamma profit, which I've talked about before. Gamma exposure per 1% move yielding, let's say $8 to $12,000 in gamma profit per 1% move on a $500,000 notional options position. Now, obviously, you could scale this down quite a bit and do all of this in micro. So it's quite possible for smaller people to do it. And then we're transforming a straddle built around pure volatility that I predicted a few weeks ago. And if you're trading it in a naked way, it's going to be virtually high risk because of the unpredictable volatility. But we're protecting ourselves against that. Okay. And that becomes profit from the market noise. So there's that. Plus, it will able to, as what I ask in the prompt is I ask for any quote unquote secretive, unknown algorithms in Python. So it provides that for us. So here's the goals on the back test. Now, again, this is not 100% predictable, but we're doing our best using the current conditions. Okay. So here we're projecting a Sharpe ratio of 1.87, max drawdown of negative 11%. Okay. 15% is good. Anything within that tolerance. Win ratio 74%. Profit factor 3.12, which is very high. Anything over 2 is considered quite good. So we're going to hold this for 18 days, this particular trade, and capture applied volatility at 67%. That's a pretty good trade. This is where it gets very. Oh, let me show you the points here. So this is between these two dashboards. This one generated in Claude 4.6 Opus. This one similar, but using Miniax M2.1. Here's the difference in cost. So here, when you factor in the cost of this dashboard in Claude, this is how much it's costing us. Might not sound a lot for a dollar, but it's 29,000 points. Meanwhile, to generate the equivalent of what I just showed you in Minimax, it's about 5% of this. So if you're generating deep analysis or heavy coding, it gets expensive. So this is why I say I think the US AI is going to have a very tough go when you get these type of LLMs or models from China that are doing it 5%, 10% of the equivalency of what any of the best US based AI model can generate, let alone data centers. I have no idea how this works and how they're able to do it for on the cheap like this. I don't know based out of China, but that's your actual cost right there. So let's get into the more exciting stuff. So in here, I've spent 5 days kind of wasting my time generating different types of dashboards under these same conditions and trying to be able to rapidly generate code in response to these particular events. And I try to do it all in Python. Did it in many complicated ways. So I kept it very prim and proper, very simple, to a point where I'm very comfortable calling them trading bots because that's kind of what they are. So before I show you the equivalent of these dashboards, I'm going to show you some examples here. My next other prediction I'm going to say is I do believe that trading platforms, retail trading platforms, are pretty well doomed as well. Here's why. Here's a random script that I downloaded for TradingView, Pine Script, a step trailing thing. Okay. And there it is. Converted it into Python with two-line prompt, generated it, no problem. Here's how I did it. So I'm using VS Code. I'm using this fairly new extension called Kimmy Code. Okay, it's what you're used to with other AI tools. Okay, you prompt it and it gives you a result. Better thing is, from what I'm used to doing, it actually changes the code. Some of the models that you choose will actually do the building for you. So this is important to know. I've also tested Claude Code. I've also tested all these other CLIs. I will tell you, if you're a beginner, you're getting hosed badly. Because if you don't put the time and effort into what I will show you, knowing things like DevOps, you're getting hosed because you're going to pay double the cost because you're expecting the AI to do all the building for you and running uh, the code for you. If you don't know what you're doing, call it vibe coding, and you're going to get killed on that, and it's going to get very expensive. And even $200 a month may not do it for you. I'm sure you've heard about the example of the C++ compiler that got built out as a Claude. That came at a cost of $20,000 among 11 different agents. The other thing I have to say about a lot of these CLI tools is they run in agentic mode, meaning you ask the prompt and it'll automatically go out and run in parallel all these different agents for you to get a result. That means you're going to be paying probably a lot more than you need to accomplish something. So here with Kimmy, that will minimize it. That could be said also with any of these CLI. If it's Gemini, if it's OpenAI, it's all the same. These CLI tools are meant for like beginners, vibe coders, and they're getting slaughtered on cost. They don't even know it. All because they don't go out and input and learn the basics of programming, specifically, let's say Python or JavaScript, and on top of that, running all of the Bash, Linux commands to get things done because you're paying for all of that in the prompting using something like Claude Code. So that's something I don't recommend. Okay, but you can do it here with this Kilo extension at a much lower cost with VS Code, which is free. And the other thing is, you're not limited to one proprietary set of models because it comes from one vendor, like with Gemini, let's say, in Google. So you have that advantage as well. And with this Kilo, it's very low cost, and then it gets even lower cost when you only use Minimax, as I've hinted. So you have to ask yourself when it comes to using these specifically, as I said, I'm able to convert this with two-line prompt, which is a um, Pine Script to a Python equivalent in 5 minutes, and maybe one error to work with, fix it. And it'll take you no more than 5-10 minutes to do. So going all the way back to when you had hand coding and how long it would take you to do, let alone to generate it and let alone to try to convert it, we're able to literally do it in minutes. So I did the same thing on purpose for all you MetaTrader folks, Forex traders. So this one is using MetaTrader MQ5, 200 line. I generated equivalent. Okay, it's a little longer, but in Python. Same process, 5-10 minutes. No problem using Minimax and the Kilo extension. Blows my freaking mind. Okay. So let's go and be a little more practical. So I talked about this one strategy here, the 1.2, this crude oil volatility that we're presented with today. Okay. So I took all of this, fed it into a prompt, prompted a certain way, and asked for it to generate code in Python. And lo and behold, it generated it. And here it is. A fairly lengthy but simplified strategy or bot, you call it, in Python that will interface into my C# server. Okay. That I've shown before, but this one's much more simpler. And from there, it interfaces with Rhythmic Trader Pro into the API of Rhythmic Trader, and it will trade. I've tested it. It will trade and send out orders as well. So now I'm ready to go. And I did this oil volatility strategy from this, okay, feeding it into the code. As for the Python equivalent, Did it in less than 10 minutes, flawlessly. So right there, you've got to ask yourself, where do we go with this? What happens to all the people that did all the hand coding here? I don't know. But I will tell you right now, you can do it on the cheap. You can do it fairly accurately, um, and be able to actually get it working and running within 10 minutes. This is what I try to achieve. So it's no longer a C sharp client connecting with C sharp server, which the server really, as I said, is a gateway between the strategies and Rhythmic API as a gateway. And of course, using Redis messaging as the message bus using PubSub, which I've talked about as well. So this is very, I'll call it, to me, it's very revolutionary. Okay. So here is the actual, we'll just run this. It's going to connect into the server, C sharp, off it goes. Okay. And it's running, waiting for signals, and it works, and it streams work. And if there's an order opportunity, it'll put that in there too. Okay. So I just want to show you that. This is where we're at now. That said, if you want to know more, there's links, quantlabsnet.com. This will get more expensive as we move forward. And now we have the ability now to trade this live. Okay. It's got some bugs here on the pricing, make sure it connects into the right instrument. But before that, no problem there. But we're now good to go. And we'll leave it at that. Thanks for watching.